Hi, welcome back to the F8 sessions. Today we'll be speaking about the topic on internal controls. Right? In the last topic we have learned about the audit procedures, we have learned about audit evidence, and we understand how audit work, the activity, the process is different from audit evidence. Yeah. So now, before we go into collecting audit evidence, ISA 315, International Standards of Auditing 315, says that we must understand. Yeah. So this standard is about understanding of the entity and its environment, of the entity and its environment, to identify risk of material misstatement. Yeah, we often say ROMM. Yeah, so we need to understand the entity. Now, why are we understanding the entity? We have learned in the previous chapters. Of course, we would like to know the inherent risk, which we have already discussed before, but today we want to focus on the control risk. Okay, now what is this control risk? Is the risk of the internal controls, not being able to prevent, three words, prevent, detect and correct material misstatements. Okay, now we are going as an auditor, we want to ensure that there is no material misstatements. So we want to, of course, do the audit evidence, find out audit evidence about all the material misstatements. But before even going there, because we are following risk-based audit, so we want to first give the chance to rely on the internal controls to minimize that risk. So if based on the minimization of the internal controls, then we will decide, should I rely on these controls, they are able to prevent, detect and correct material misstatements, or should I just not rely on the internal controls and continue with the audit evidence. Yeah, so we want to assess control risk. Right, now before going there, let's understand what is internal control itself. Now whenever we talk about internal control, please know we are talking about business risk. Yeah, we are talking about business risk. We are talking about, so the meaning of the word control itself means this is a process designed by management. Why they design this process? Because they want to address the business risk. Business risk of what? Business risk of not being able to achieve entities' objectives. Okay, so I have a business risk of not being able to achieve entities' objectives, and I want to make sure that I design processes, activities to make sure that those risks are being addressed, are being minimized. So now what are those entities objectives that the internal controls, particularly which the auditor will like to assess? Because you see, we are not going there as a consultant, we are going there as an auditor. So I'm going to talk to you about what are the internal controls that the auditor will want to assess with regard to the entity's objectives. Number one is about the entity's objective with regard to reliability of financial reporting. So you want to know what are all the internal controls which the management has designed, which ensures that the financial reports are reliable. Yeah, so we want to assess all the processes. Number two, we want to talk about the effectiveness and efficiency of entities operation. Okay, why we are wanting to know about the internal controls regarding the effectiveness and efficiency of entities operations? Because as an auditor, you are talking about the business performance. What is your opinion on the financial statements? So how is this operations related to the financial reporting? Can you think of that? How is efficiency and effectiveness related to financial reporting? For example, if let's say if you have too many assets, if you have surplus assets, it's a business risk that if you are having assets and they are not used to the maximum, that means there is extra assets, that means there's a poor asset management. Now, how is poor asset management related to auditing? If your asset management is poor, which means that there is a possibility that the assets need to go through an impairment test. You see, that's why your mind should always relate business risk to the risk of material misstatement. Okay, so you see, that's why we are understanding the business. Those old days where we used to do audit simply by checking transactions are gone. Now we actually have to understand the business and then understand the business risk, because everything is linked to the financial reporting, can have an impact. Yeah. So number two is about effectiveness and efficiency of entities operations. Okay. Then number three, I want to make sure what are the internal controls that the company does in order to ensure there is compliance with laws and regulations. Okay, with laws and regulation. So I need to be clear, because if there is a non-compliance with the laws, then again, what is the impact on the financial reporting? There is a possibility that if they are not complying with the law, which means they are required to pay a certain penalty, and that particular penalty is a liability to the company. So it's important we record that there is this potential provision, for example, that we may need to make a provision for a particular penalty which we have faced because of possibly lawsuit with a customer, or you have violated the environment, and you have to pay penalties, or you have not paid your tax rates, you have not applied your tax rates accurately. That is also examples of non-compliance with laws and regulation. So we need to make sure that we need to understand internal controls. So what are internal controls? Is process designed by management to address what? To address the business risk. Of what risk? Risk of not being able to achieve entities' objectives. These three. Yeah, so these three which we will address to understand internal controls. All right, now what are the components? So in the past there has been exam question about what are the components of internal control. Okay, so number one is about control environment. Okay, then number two is about entities risk assessment. Okay, then so entities risk assessment. Number three, we are talking about the information system relating to financial reporting. Okay, and then number four, we are talking about control activities. Number five, we are talking about the monitoring of controls. Monitoring of controls. Okay, now what are these components? So control environment talks about the attitude and awareness. Attitude and awareness of management towards internal control. Yeah, why are we so particular about the attitude and awareness of management towards internal control? You see, we can have the best control activities, the best processes to ensure everything is as per the entity's objective, but if the management, the top management itself does not support the idea of all the processes, maybe they feel that, oh, it is too long, it's too bureaucratic, there's too many forms to fill, and you know, maybe they feel, I just want to do the faster way, I just want to do it the easy way. Yeah, so if you are auditing and you're finding such management behavior, for example, you go to the client and then the client, you interview the purchase manager, and you get a sense that that some of the processes are not actually being done because sometimes the CEO allows the certain processes to just they bypass certain processes. For example, I want to order goods, and instead of getting the 3 quotations from suppliers, the purchase manager just submits 1 quotation, goes to the boss and says that we have this best I know this person, and this is the best quotation that I can get, and then the CEO approves it, which means the CEO is not enforcing the right attitude and awareness towards internal control. Yeah, so this is about attitude, and so this talks about management philosophy. It talks about the management's organization policies. Yeah, so it addresses policies, it addresses management philosophy. There. Okay. Then of course you will have your entities risk assessment. Now, whenever we talk about risk assessment, we are talking about 2 things. First of all, is the business, is the company having a regular process of risk identification? Yeah, are they able to identify what are all the possible business risk faced by the company? Yeah, so is there any identification process? Second is, what are the risk management policies that the company applies in order to minimize the risk that they have found. Yeah, so risk assessment is critical to find out, for example, they understand the process of getting, for example, what are the risks that is related, business risk related to online orders. Yeah, whenever we get orders online, there is a risk involved, which is the customer may be a fake customer, or goods are sent to the customer but there's no payment transferred. Yeah, so there is a risk. There's a risk in every process, but the important part is not about that risk is there. Important is management, are they aware about this risk or not? Secondly, is there any documented policies about this risk management? So that's what we want to know as part of the entity's internal control. Yeah. Second is about the what kind of information system are they using for the financial reporting. Okay, so this is where you will address the accounting software itself. Yeah. Yeah. Then after that, because this information system will have a impact on the reliability of the financial reports, because especially if they are not having an integrated system. So a common exam scenario will have issues about lack of integrated system. I give you an example. Let's say we receive orders from customers online, okay, on our website, and the website process the orders without checking whether these goods are they available or not in the warehouse, because the warehouse system, which means the inventory system, and the customer order system are not integrated, you see. So it's important that the company has an integrated system when it relates to, because that means we will have sales recorded whereby the goods are not available, and hence goods not available, and the goods are also not sent to the customer. So you may just have sales recorded based on goods which are not actually being sent to the customer, and according to financial reporting we should not record such sales. So the importance of how information system is in the company relating to financial reporting is critical. Yeah, the auditor understands how the information system is, especially in the exam whenever you have new softwares being implemented. Yeah, so you will definitely have a risk that the systems are running on a parallel system, or is it full transition to the new system. So the information system must talk about this. All right, now many students in the exam, they confuse information system and the control activities related to it. Yeah, because the control activities regarding the IT, yeah, the information technology, because one of the internal controls is information technology. Yeah. Now, information technology controls and the information system controls are there's a very thin line between it. Information system talks about the system design itself, the process of how input is into the system, how the process formulas are until it goes to the output. Yeah, So we want to test the whole process itself to ensure the system is as per the standard. But when it comes to control activities, the information technology control, then we are talking about the two controls relating to information technology. Number one is the general controls. Second is the application control. Okay, now what are these general controls? General controls are controls which have an impact on all the systems, right? So the impact is on all systems. Example is system development. Example, system testing, right? Example, that we have database protection. Yeah. Example, we have contingency planning. Yeah, this is relating to your disaster recovery. Yeah? Whenever there is a earthquake or a flood, we want to know what are the general controls that the company applies. So do they have the disaster recovery plans? Okay, now database, not network, system development, system testing, this is what we call general controls. Yeah, we want to know, is the company applying those controls or not? Yeah. Then application controls. Now application controls talks about the input, process and output controls relating to the financial reporting. Yeah, relating to financial reporting. Okay, now what are those input, process and output controls which are applied in accounting system? Okay, so because we want to make sure that the input to the software, the data entry is accurate. We want to make sure the data entry is complete. We want to also make sure the data entry, so we want to make sure data entry for the input is accurate, it is complete, it is also valid data, meaning it's not a fake data. You see, so how does the application control look after that? I will give you an example of some of the. Okay, so this is the example that I want to show you with regard to the application controls in information system. Yeah, so we are talking about the, for example, these are your purchase invoices, and you have 5 invoices, and then you want to make sure that these invoices are entered into the system accurately. So we want to how do we make sure? We want to make sure the dates are correct, the suppliers names are correct, the supplier codes are correct. So number one, how to make sure that it is complete. Yeah, so how to make sure is through the sequence check. So sequence check is also one of the application controls that the system will be able to check for you. So if you have a missing link, for example, in this 160 is missing, then the system will give you an alert that there is a missing invoice. You see, that's nice. And then second, you can, for example, the data fields are entered wrongly, different from the field itself. Yeah, so for example, this is the supposed to be a date, and then we enter the name, then there is a format check there. Yeah, the supplier names, for example, we want to make sure that these are not fake suppliers, or these are not suppliers which are not the vendors, the approved vendors of the company, because every company should have a master vendor list. So that master vendor list, we will have to input it here. So if this is not in the master vendor list, then the system will not be able to take in. So this will avoid any frauds in the company. So the supplier name must be derived from the master list. Okay, also we will avoid that there is a duplication, you see. So sequence check is one of the application control. Format check, then linking it to the master list. Duplication check, right? Field check, that there is one item which is missing, highlighted, the data is highlighted, you see. And then the amount itself. Now for the amount, we have something called range check. You see, what is the range check? For example, if you know that all the figures, we never have a 3 4 behind it, so it will be able to say that there is an error here, because maybe we sometimes have put additional 0. So the range will be able to control how much is the, for example, all the sales, all the figures are all below 10,000. So all the sales are below 10,000 per unit. So now if you have a 662,290, then you know that this is above the range. So this is what we call range check. So you need to know what are the examples of application controls: sequence check, format check, field check, duplication check, range check. Okay, so that's to give you a preview about what are all the application controls that you need to know. Now moving back to our lesson earlier, so you know what is application control. Okay, now I want to tell you about all the control activities of a company. Okay, now control activities, I like to summarize that. Control activities. Now, what are the control activities? I like to put an acronym of AAPIPS. I like to say in Indonesian context, ada api di Plaza Senayan, you know, just for you to remember. So what is that api in Plaza Senayan? So we say A. What is that first A? This is the arithmetic and accounting control. Arithmetic and accounting control. Okay, now what are those arithmetic controls? One of the arithmetic controls that we do is, for example, checking on the totals. Yeah, checking on totals. What kind of totals? We are talking about batch totals. So before we give the data to our staff to fill in, we already say that 50 invoices, what is the total of the value of these invoices before we give to the staff to fill in. So this is a batch control, right? And then every time we want to fill up a particular data, there is an arithmetic check on it, yeah, to check accuracy. So there is an accuracy check on every transaction. That means we will normally say that is this figure verified by another person. So there is a verification that is going on. Then what are the accounting controls? We are talking about bank reconciliation. We are talking about reconciliation between supplier statement and the payable ledger, right? We want to make sure that there is no difference here. What are the other reconciliations we do? We do reconciliation between the control accounts and the subsidiary ledgers. Yeah, what are the subsidiary ledgers? We have two, right? We have the payable ledger, and then we have the receivable ledger. So we want to make sure that the total of all the suppliers, the total of the individual list of suppliers balances is same as the total account payable, which is inside the control account. Yeah, so you know that this is one of the accounting controls that we normally do. So we want to make sure that does the client have all these sort of reconciliations or not. So this is what we do, arithmetic and accounting control. Then the next one, the next A is your authorization control. Now in exam, we want to make sure that the authorization is at the right level. So it's not about only getting it signed. Getting it signed is not enough. Yeah, it's not enough. Getting it signed by who? Signed and reviewed by who is the question. Now, why am I highlighting on the who? Because many times, what if the purchase orders are signed by purchase supervisor and not by the purchase manager or the director. How? Because you see, purchase director. Yeah. If the purchase orders can be signed and approved by the purchase supervisor, we say that the authorization is given to officials which are not of the appropriate level, because the authorization must be at the appropriate level of position. So if you're talking about purchase orders which are of small amounts, then maybe you can let the supervisor have a certain bracket that okay, you can only authorize purchases which are below $1,000, for example. But for purchase manager and purchase directors, anything above 1,000, or for purchase director, anything above 10,000 should be purchase director. So there you need to have leveling. So inside the authorization, I want you to highlight an exam is the levels of authorizations. Yeah, so in exam, please mention that about the levels. Then second, the next one we're talking about is the P. Another P is what we call personnel control. Okay, now how do you control, establish good internal controls? So you want to make sure that the people that we have are already of the best people. So you put the best people at the right jobs, then there is already a good control, because you already have people who have at the right qualification, means they will not do mistakes in their job. You are also putting people of the right, so you have the right qualifications, you have the people of the right ethics, that means they will have the right integrity to do their job. That is also already a good personnel control, right? So now how do you control personnel? You control personnel by putting in your supervisors. Yeah, so you have supervisory control. So if you have an exam scenario where you're talking about, example, you want to monitor telephone orders. Yeah, you have got an order on the phone, and so you receive orders on the phone and you process the order. But what if this telephone order, if it is not supervised, there is a risk, there is a business risk that I could be the one who's ordering is my friend, and I could be sending company's goods to my friend who I have not checked the credit limit, who I do not know whether the person will actually pay me or not. So this could result in a fraud. So what do? You put supervisors on top of your personnel. So you can put supervisory control. You can also put management control, which is what? How does management control the personnel? Through performing performance reviews. Yeah, they make sure that at the end of every 3 months, 6 months, they are conducting the performance evaluation. Yeah, so to see, so this will keep the employee in check. All right, and then you can also have policies. You have organization policies. Okay, so you have your personnel control. Okay, now moving on, we have the I, which I told you was your information technology, which I've already discussed earlier. Yeah, about what are the information technology controls. We have general, and then we have the application controls. Yeah, now one of the things I have missed out about the idea of test data. There's often a multiple choice question, what kind of control is test data? So what is the meaning of the word test data? So the meaning of the word test data, it means we are talking about dummy data which is being fed into a new system that is being developed, and to see whether the results are as per the system's objectives. So that means this is a way to test whether the system is working or not. It's just to put a dummy data, or we call it the offline data. Now this offline data we put into the system and see whether the right results, the right reports are coming. So it's also a common exam question. So you can say that this is a general control which should be applied to all the systems. All right, so we're talking about information technology. Then you have your P. Your P is talking about your physical control. Physical control is talking about your things like your CCTV. Do you have a CCTV? Do you have the right security guards? Is there any lock on the warehouse? Then we also like to question about how many people are holding keys. Who is holding the key to all the warehouse locks? Yeah, so this is physical control. Then the last one is we are talking about is your segregation of duty. Yeah, so exam question often puts this scenario that one person cannot be the one, he is the one recording, he is the one he is also doing recording, he is also doing execution, he is also the one reporting. All right, No, so the best practice is to separate these functions, right? The one who's executing, the one who's recording, the one who's reporting are different people. So this is to minimize the possibilities of a fraud. Okay, so now all these are what we call as the control activities. So now in the exam you will have a system that will be given to you. Okay, now and then what will you do with that system? You'll be asked to identify deficiencies and provide recommendations, right? You'll be asked to give deficiencies and recommendation. Now when you analyze these deficiencies, you must talk about these control activities, because these control activities will become your possible recommendation. Okay, now what will be the deficiencies is basically all the business risk that is not addressed. That will become your business risk. Now please highlight this word, that whenever the question talks about deficiencies, they are talking about business risk. They are not talking about audit risk. Please get that clear. In the last question that we did, we learned about audit risk, which is the risk of material misstatements not being identified in the financial statements. Here we are talking about business risk. So here we are evaluating whether the company is having a system which is able to prevent, detect and correct material misstatements. So we want to focus on the business risk. Yeah, so please highlight this word, that deficiencies need to focus on business risk. So when we learn about this control activities, you know that this will be put in your recommendation. So often a format that I often give to the students to remember, how do you come up with deficiencies and recommendation, is basically I tell them, think about these three things. You have your assertions, you have your control objective, and then you have your control activity. Now for example, the assertion about, let's say, occurrence. Yeah, so we have learned all the assertions before, and one of the assertions is occurrence. Now let's say we are talking about sales system. Yeah, and now in the sales system we want to make sure that the sales that is recorded is not for a fake customer. Okay, so the control objective is to ensure sales recorded is not for a fake customer. Means the sales is not a fake sales. Yeah, that means the sales recorded is a valid sales. Okay, now how do you, so this is the objective, how do you make sure that the sales recorded is not for a fake customer? What will be a potential control activity for that? Yeah, now what are the controls that you want to like to implement in this? Can you think of? Now one of the things that you can do with regard to handling a fake customer is to you can implement authorization controls. So example, example, you can say that all sales orders are matched with goods dispatched note GDN before accounting department issues a invoice, right? So before accounting this, there has to be an authorization. What kind of authorization? That all the sales order, without the sales order and the goods dispatch note, I will not be able to issue an invoice. So the person, so the one who is there has to be an authorized personnel to issue invoice there. So that would be one of the control activities. All sales order are matched with good dispatch note. So we only want to record sales if there are actual sales orders where there is a goods dispatch note and we have then issued the invoice. So we know that these are not fake customers, because what is the meaning of fake customers? Fake customers means the orders are fake. That means it is not the company's one of the customers is not the customer who has not yet gone through the review, right? Because we always have the credit controller who reviews all the customers, so it's not one of the listed customers. So the orders are not fake. So there is a genuine sales order. Then second, the goods are actually being delivered. Yeah. So the company cannot lie about the sales if the goods are actually delivered and there are actual orders. Yeah. So orders are not fake. Yeah. So this is how you think about what should you do. So you have an assertion, you have an objective. So in exam, think about the objective and then the activity. Yeah, so we'll discuss this when we do more questions. Now, the last part of the internal control is talking about monitoring of controls. How do you monitor these controls are actually they are being implemented? That's number one. Number two, are they effective? So monitoring of controls, or another word for this is your test of control. Yeah, which we have discussed in the previous session. So what does the monitoring of control or test of control do? It evaluates the effectiveness. It evaluates the effectiveness of the internal controls. So now what you do in your exam when you're thinking about when the question says design a test of control, it's very easy. So what you do is you first identify the control activity in the question. You identify the control activity in the question. After you already identify what is the control activity, then you convert the control activity into a test of control using three techniques. How do you do tests of controls? Yeah. Now this one, number one, is you can do inquiry, you can do inspection, and number three, you can do re-performance. Yeah, re-performance. Okay, now I'll give you an example. So for example, the control activity, yeah, I'll give you an example. Let's say the control activity, so I'll put control activity here and I'll put test of control here. Okay, let's say the control activity is all purchase systems can't allow changes to suppliers' details without the appropriate password of authorized personnel. Okay, let's say this is one of the control activity that when if you want to make changes to the supplier details, because this can result in a fraud. The supplier details, I can change the name of the suppliers and I want to change it to the supplier that I know. I can change the bank account details of the supplier, you know. So I need to make sure that there is the right personnel and the right password for this. So how will I test this? So I told you that test of control can be done by three things. You can do inquiry, you can do inspection, or you can do re-performance. Now a common thing that you could do for this kind of control activity is re-performance. You could say that I will attempt to change the supplier details through the account of one of the non-authorized personnel. There, can you see? I will attempt to change the supplier details through the account of one of the non-authorized personnel. So all I'm doing is taking the control activities, and this is what I call re-performance. So you are trying to break the system by testing it whether it's actually a strong system or not. So you're trying to re-perform. Similarly, for example, we assume that there is CCTV and there is security guards. So if you're auditing a supermarket, an interesting test of control will be actually to go to the supermarket and to try to take some of the goods on the rack and see if you can walk out of the walk out of the supermarket without being caught. So of course the idea is not for you to go to jail, but the idea is for you to test the system. Yeah, and you'll be already an authorized by the audit team to allow this to happen. Yeah, so you can do re-performance. Yeah, another thing you can do, for example, let's say the question say that all capital expenditure requires requires approval of the board on the purchase order. Okay, so this is the one of the control activity, that if you are buying assets, machines, motor vehicles, so because it's big amount capital expenditure, we want to make sure that the board members are also approving that particular transaction. So how will the auditor ensure that this was actually done, the authorization was done? So you could say that you want to do what you want to do, because you see you only have three weapons: inquire, inspect, and reperform. So you can inspect. What do you want to inspect? You want to inspect, you would like to inspect and review the board minutes of meetings to assess whether there was a board approval there. So you notice tests of controls are quite straightforward. All you do is identify the control, and then you convert that into the test of control. So you just want to see whether all the controls that you have listed in the question, are you able to test whether are they existing, are they effective or not. Yeah, so this is some of the examples of how you can convert activities into tests of control. Okay, so that will cover what are the internal controls. So if you want to repeat, what are the components of the internal control? Number one, we have what's the first one? We have the control environment, right? We want to make sure that there is the support from the management, because a system can be broken through collusion. If two employees collude, then systems is broken. Yeah, so we want to make sure there is strong attitude and awareness of management towards internal controls. We want to make sure there is a system for identifying and managing the risk. We also want to make sure the information system that they are using has all the general and the application controls. We want to make sure that they have all the RPPS that I have shared with you. Now once you already set up your controls, then we want to make sure that all the controls are tested. How do you test it? It is through test of controls. Okay, so what kind of questions will come with this topic? Your major questions will be about these two topics. Number one, you will have a question where they will ask you to identify the deficiency and the recommendation, right? You will have a deficiency and the recommendation. This one I have shared with you how to identify deficiency and recommendation. So whenever you talk about deficiency, always talk about the business risk in the company. Then we will make the recommendation based on the control activities that we have learned earlier. Okay, then second is we want to learn how control activities can become can be converted into test of controls. Okay, so in the next session we will do a question for you to see how is this actually done. Right, thank you.